And we're live. Welcome, everybody, for a Monday afternoon hot topic discussion. Let me turn on my noise filter. Yes, I'm sure that's much better. I got lawn mowers and fans and two little tyrants running around, and we're trying to filter that out, keep it nice and clear and clean. All right. As I said, it's Monday and it is a new week, but nothing is it's not new what's going on because it has been going on. There's craziness in the markets, and we've seen the direction that things are heading. We see what's going to play out in so many regards. And that's the fundamental analysis that I love to do. We evaluate where we are in markets. We understand the status quo, the situation, the complexities that need to be solved. And then we could look to what the solutions are and envision how we get from where we are to where we want to be and where we're likely going to be. And that's fundamentals of investing, because if we know where we are, we know where we want to be, and we position ourselves here, and that's how you win with investing, as I call saving nowadays. You put yourself in position for the market to come to you. You don't chase where the market is going. I'll get to that, Franz. Yes. Oh my God. So that's a perfect example. All right, I'm going to get to it now. Digibyte. We knew where it was heading. And UTXO chains are going to take a lot longer to adopt because the status quo systems that UTXO is going to disrupt with regard to data storage and asset management, it's going to take much longer to adopt. But many people joining me today are positioned in Digibyte, particularly because we see its potential, its protocol properties, it's a UTXO data storage, asset management. We know it's going to disrupt the legacy system. We don't know the time frame involved. We know it's an inevitability. So many people have invested. They have positioned themselves. So when the market comes to them, that's the win. Keep time frames out of your mind. Time frames are a burden. And the second you get time frames out of your thought process, you're going to relax. You know that you've positioned yourself for an inevitability. You're not waiting for a, a month, a day. You're not waiting for a particular time frame to come to pass. You're waiting for a disruption, a systemic change, an adoption. You're waiting for the market to come to you. And one, it's a relief. And two, it's a more satisfying win. Because when you invest, when you save like this, you positioned yourself beforehand. And then when you get to tell the story of how you got to where you want to be, it's because you saw it coming. You knew you were ahead of the game. And that's the wins that count. That's the win when you hear stories. Oh, how did I make it big? Oh, in the stock market. Yeah, this is how you do it. You position yourself beforehand. And then you get to tell everyone you made it big. How did you make it big? Because you saw what was going to happen. All right, we'll go down the list because this topic of discussion I wanted to talk about was the future of money. So all of this, in some regard or another, is the future of money. And I've touched on a lot of parts of that with the CBDCs, the central bank digital currencies, the current situation going on in the global economy, the stress, the fracture points, the coming solvency crisis, and how all of these components are going to play together to cause systemic change, a disruption of the status quo. Digibyte is now on Binance. Ah, oh, don't think about the stuff that has happened to make this come to pass. Don't think about the controversies and complexities and the emotions. Jared had emotions, and his emotions were valid, and he's overwhelmingly an extremely experienced person, a smart person, one of the most valuable minds that I've ever encountered with where he's been, the geographical locations, the work settings and experience that he has. His mind and his experience is invaluable, and it's extremely emotional to uh, point being, I understand his perspective as a developer, having created what I created back in '09 with my applications, what I did in college with some entrepreneurial tendencies. It's painful to watch what you've created not being used what it was created for. But what he created will be used. What it was, why it was, for what it was created for. It is an inevitability, and every investor, every saver who saves DigiBear right now shares that same sentiment as Jared. He has overwhelming integrity. He is a special mind, and he's overwhelmingly appreciated. I've spoken to him many times, and I would go out of my way to help him and do anything to help participate in this system. I want to participate in change because the status quo is not acceptable. It is not acceptable. The routines that we have, waking up, going to work, barely making ends meet, this is not acceptable. I want to be a bank. I want to lend money and help businesses grow. I want to lend money so leveraged traders can gamble. I want to lend money so someone could take a long position on an asset that has profound chances of appreciation. And now we can with DeFi. I can be a bank. I can make yield. Historically, the banks made the yield. They accepted deposits and lent money for interest and paid the depositors a portion of the interest. That is exactly what is happening with Compound and Aave, and to some degree with Maker, which is all three have distinct characteristics and properties and are the core components of the new system that is being built that overwhelmingly is going to disrupt banking. They have made bankless banks. Anyone who puts their money on Aave, Compound, or Maker is doing exactly what a bank does. Holy crapsicle. That's crazy. The banks are irrelevant because the bank has to spend money on property, on software, on technology, on DevOps, on human resources, on paper and security, and all of that. And it has been replaced with zero cost for a decentralized, deployed smart contract that does the exact same thing. One, the technology needs to work. Two, it needs to save money. That is how disruption occurs. And we have, as a DeFi community, have replaced enormous expense with zero. Fine. Anyone from a banking perspective who wants to switch to this zero expenditure system, sure, they probably want to participate in security. And this is where mining and Ethereum turning to proof of stake comes into the picture. That's how people participate in decentralized or the security for a decentralized network. Absolutely incredible what's playing out. I confirmed everything you just said about getting rid of time frames. Whole lot more relaxed, and that is absolutely the case. Why think in time frames? Focus on inevitabilities. And sure, inevitability is a subjective interpretation, a subjective realization, but it's not an infinite amount of time required for an inevitability to occur. We're on the precipice. That has a negative connotation. We're on the threshold of systemic change. Why? Because the legacy system is primed for disruption, because it is broken, it is bad, there is a superior system available. And all of these factors point to the inevitability being sooner and then later. And that's how you position yourself in the market before the market comes to you. Ren is up 12%. I don't mind, but does not matter if you already got your 100K Ren. Okay, here's the deal. There's nuances to the Ren protocol balance with regard to security and encouraging dark node owners not to liquidate, and this has to do with the mint and the burn fees and a continuous. It's a complicated balance, a double-edged sword of sorts, but more so a balance of how the protocol is going to be tweaked and twisted as we get out of subnet zero, as we get into the more stable, the more volume. That is where we see the algorithms taking over for these types of fancy balancing acts that need to be done. So my recommendation with regard to investing, saving, don't look to the appreciation of assets. The appreciation of assets will not set you financially free at all. Fine, if you had 10,000 Bitcoin in 2009, fine, you'll be financially free. But even then, once you spend money, it's gone. You need money to make money. You need money to be your worker. And when you do that and you have revenue streams, that's true financial freedom. Freedom of choice has been achieved. So stop thinking about the appreciation of Ren. Yes, it is nice to see, because that means it's in demand. The demand is exceeding the supply. I could care less about the price of Ren. Fine, it's nice, as I said. It's nice to see it. But what I care about is the fact that a dark node and the dark node network and the concept of interoperability and the ability to access $200+ billion worth of equity on the UTXO chains in a smart contract Ethereum DApp ecosystem is profound. That shit is crazy. We've seen the market where Ethereum is the primary source of collateral, of equity. And now we're going to expand that to 200+ billion? Woo! It is crazy. I could care less about the price. I care about the network. I care about seeing the network being consumed and adopted. I care about recurring revenue streams. I wouldn't sell if Ren went 10x. Right, fine, I'd be tempted, but that's where the damn protocol properties come into play. The whole protocol, the entire point of the project is designed to incentivize the dark nodes not to liquidate, because the revenue from operating the dark node is superior than the one-time liquidation. And that's how you maintain the security of the network. But we are way early to start contemplating those types of protocol modifications, in my opinion. I think, as Long talks about it, as bootstrapping phase, the security of the network is maintained by the gray core, and I think we just let it run from here, which is kind of what I mentioned at a variety of channels earlier this morning. Yes, focus on cash flow, Franz. Yes, that's the win. Everyone's looking for financial freedom, and everyone on Twitter is like, to the moon, and they don't understand that is not financial freedom. That is a payday. And this is about asset value management, because if you got a payday this is why people that win the lotto are broke. They will go broke many times, because they have not put the due diligence in for how to manage assets and produce recurring revenue streams, which means if you get 10% on $1 million, you're making $100,000 a year, you still have your $100,000. You have not spent a dollar of your winnings. And that is the goal, and that is the win. Yes. Ren will take over WBTC for lock value within 2 to 3 weeks. Holy crap, you are time framing it. Don't put a time frame on it, but Ren is nipping at the heels of Bancor right now. Whoa. It is basically number 10 on DeFi Pulse, between the Ren bonds and amount of Bitcoin equity locked. And that's crazy. For less than a month, it has taken over the DeFi scene because there's $200+ billion of UTXO equity to access. And that's crazy. It's happening. It's going to happen quick. The chart is vertical. It's the reason it's going to happen quick is because the system is primed for disruption and there's immense value. Leverage debt, I've talked about it yesterday, talked about it the day before. We'll continue to talk about it anytime anyone asks me. But I wrote a Twitter reply earlier that DeFi now has options, perpetuals, margin, and obviously the trading markets and lending and borrowing. DeFi has all of the features of the legacy financial system now, and it's just starting. We could earn yield. We can be a bank. We can be free. That's where we're heading. Very exciting. So the future of money, unless anyone has any questions, we'll get to the original topic and point of this video today. The future of money. What is money? I don't want to get too philosophical and bore people. So if anyone has any questions, I'm happy to digress as usual. And we're also going to keep this video a little shorter today, 12:30, 12:45 maybe. So money, gold is money because it facilitates an exchange of value, silver. Anything that retains value pretty much is money. Why? Because you could clearly exchange anything that retains value. And all that matters is whether it's a pain in the ass or not. So exchanging coinage is an annoying practice. Exchanging a $50,000 bar of gold is a ridiculous proposition. But clearly it retains value. You know what doesn't retain value? Dollars. Fiat is not money, period. Does not meet the definition. It is done. History. Well, that's another story. Belief. That's fiat. Fiat is a good portion of money, and the concept of retaining value is a belief system, a consensus. So in that regard, anyone that argues counter to this is not considering logic and rationality. Even gold. The reason it retains value is because of a shared consensus, a belief system that value is there. It's all based on psychology. It's all based on a shared, agreed upon opinion, agreed upon valuation. Well, fiat clearly, you know what destroys any value is loss of faith. So clearly gold is not going to have a loss of faith. It's proven itself for thousands of years, way beyond any fiat currency in history. And as long as faith is still there, that an asset has value. Woo! And obviously what's happening is fiat, the faith is gone. Who's going to save dollars unless you obviously don't know any better? And that's just unfortunate. And that's why I'm trying to do videos like this. Saving dollars is the wrong course of action. And guess what? There was a CNBC article, I believe I posted yesterday, that $2 trillion has been saved since the pandemic started. $2 trillion worth of mistake and error and lack of knowledge on how to achieve financial freedom. Dollars are a means of exchange that are depreciating continuously. They're being inflated away to oblivion. You need dollars. You need to have a bank account because you need to exchange value. You need to purchase goods that are priced in dollars. You need to buy commodities and consumer staples. You got to buy food and you got to buy toothpaste and medicine, and everyone accepts dollars. It's a universally accepted value in exchange for a good or a service. So you need dollars. But I sure as hell am not thinking about saving dollars. When there's a better on and off ramp, and these crypto credit cards are questionable, they're not decentralized. It's messy. It's messy to try and pay things in crypto. It can be done. You can be completely off the dollar and move all your assets into DAI, USDC, GUSD, so on and so forth. But it's a bit of an annoyance, and dare I even entertain the notion of taxation? So it'll drive you nuts trying to contemplate and understand how to handle it all. It's a hot mess. So, but saving dollars is a worthless pursuit. You will not achieve freedom, period. It is a failed proposition. It is a wrong course of action. Keep 10% of your paycheck in dollars, enough to pay your bills. But if you want to save value, retain your value, it's not in US dollars. It's in gold. It's in silver. Contemplate certain equities that will appreciate versus depreciate. But bear in mind, listen, the dollar is not a fixed. This is the fallacy. Here's the fallacy about fiat. It's not a fixed value. It's not $1 equals $1. That one you see in your bank account is changing. The whole system is rigged to think that it is an unchanging value. What matters is purchasing power. And that purchasing power is a continuously changing value. Imagine a bank account. You open up your mobile app for your bank account and it didn't say dollars, it said purchasing power. That's what it is. That was what counts. Who gives a shit how many dollars you have? What you want, what your bank should have the balls to do is have an app that says, how much purchasing power do you currently have in your account? And I guarantee you that number is constantly changing based on the price of shit that you see at the grocery store, the price of gas at the gas station, the price of a car at a car dealership, the price of a house, the price of rent. It's all in constant flux. So your purchasing power is what's changing. Who cares how many dollars you have? Your purchasing power is also, well, no, I don't want to say it's constantly decreasing because, frankly, and that plays into the whole analysis of the global economy right now and the crazy, exciting argument or arguments for or against the deflationary or inflationary event that was approaching. You got the bulls, Brent Johnson, and the dollars going to the moon because it's going to suck up all the value. And yeah, no doubt, the logic of his argument is almost inarguable. It's incredible what he saw, his vision, his what he perceives, and it's frankly it's obvious. Now the problem is it gets very complicated because in a shorter term time frames, the U.S. government kind of printed like a couple $1 trillion. Sick people, they are sick. It's crazy. It's not fair. It's wrong. It's immoral. It's just wrong, and it makes me so angry. It makes me even angrier than what they did is that so many people have no idea what they did, what they do, and how much money they're putting into the system. Just there's no respect for the dollar. It's just like a little bitch. And I don't mean that in a derogatory sense. I mean that in a masculinity derogatory sense. I mean that, and it's just treated like nothing meaningful. It's treated like it's worthless. It's just, we're going to print some dollars. That's the sense that I mean it, and that's just unfortunate because there is something incredible what the U.S. did. The U.S. is what it is because of its history, and it's just unfortunate that it's treated with such disrespect. But that's where we are. And this plays into where we are, where we want to be, where we're heading, and our evaluation of the whole situation and how we position ourselves for the big win to achieve financial freedom. Money. Don't save fiat, save assets. Some questions. Caterpie, how come so many people still don't know this? I ask myself. Yes. How could we all believe his very bad story for the? Well, frankly, you're trying to understand why people don't. You're trying to process why the vast majority of people don't understand. And there's probably two things. One, many people can't understand, and two, it's this red pill, blue pill shit. Many people can't understand is that you're just biologically incapable of it, and that's okay. Everyone has different intellectual capacity, and that's fine. And that's why we try and help, and that's why there's social systems and programs and government for that matter. But then there's other people that choose not to, and they ignore it. And that's unfortunate. Because that's the vast majority of people that, I'm afraid to buy gold, or because what if the value changes? Yeah, your dollar isn't a dollar. Your dollar is purchasing power, and your purchasing power is constantly changing. So maybe they don't understand. And that's just what is. This is the truth. This isn't opinion. This is obvious, rational observations. The more angry it makes that 1.001% of the population is interested, what makes what money is. Listen, the rich and the powerful operate at a different mental paradigm. They're on a whole nother level. The very wealthy aren't thinking about saving money. They're not thinking about financial freedom. They're thinking about how to guide and shape society and build countries. They're at a whole different level of daily operations of what they do with their lives. It's a whole nother level. Chico Crypto talks about a lot of interesting things in that regard in some of his videos. What's your thoughts on the run of recent stories of liquidations from farming? Yes, I love this topic. I think it's not a flaw. You're damn right it's not a flaw. I think it's awesome. Why? Because the system is designed to liquidate the borrower in the instance that their collateral is insufficient to sustain the lending position. Guess what? The beautiful thing is, obviously it's sad and unfortunate that people are getting liquidated. There's no systemic risk. Do you know what happens if this happened in the legacy financial system? The bank, the lender, takes on the losses. Systemic risk, systemic instability, it destroys the system. The liquidations where the borrower is losing value, they're losing some of their supplied collateral, puts no risk on the lender, on the system. And that is revolution. 2008, where the global economy experienced the banking crisis because they were overextended on mortgages. The CDOs had CDOs, had wrapped CDOs and CDOs. The leveraged debt was enormous, trillions of dollars. And when it imploded, the lender had a problem. If it was done with over-collateralized debt, sure, instead of inflating to here, it would have inflated to here, but the lender wouldn't have had a problem. The system wouldn't have been in jeopardy. What DeFi is building makes legacy system seem wrong. And it's sad because the entire world operates on the legacy system and they're being taken advantage of. And every day that the legacy system continues to operate, stability is in jeopardy. And it's infuriating. So what's happening right now with the whole comp run is awesome because this is exactly what we want to see. The last 50 years of the global economy was built on leveraged debt since the United States came off the gold standard in 1971 with the Nixon shock. It was beautiful. Wealth creation beyond imagination. But the problem is the under-collateralized debt positions made it a house of cards, meaning if there was ever rolling defaults, the system was in jeopardy. But right now what's happening is the system is being built up again in an even better, permissionless, decentralized way, where there's no centralized controlling authority, no damn bank, and it's being done right. So the liquidations, as I said, are unfortunate for the people that are getting liquidated, but they sure as heck didn't understand what they were getting into. But it doesn't destroy the system. The system remains stronger than ever. It's growing. It facilitates an ability for people to lend and borrow. I put money on Compound. I am a bank. A bank takes deposits and lends mortgages. The mortgage interest pays the depositor's interest. The depositor's interest in a bank is a pathetic 0.01%. Whereas the mortgage is whatever it is, 3.5% right now. The banks are making the money. Fuck that. Be your own bank. So clearly the risk with Compound, the risk with Aave, the risk with Maker is the protocol stability, the security. Ethereum smart contracts are Turing complete, which means they're susceptible to programmatic, exploits. And that this is what will happen is there will be a point in time where it's just a repeatable pattern, where there's assurance to security. It's just been it will get to the point where it's like, all right, anyone who wants to lend, this is the pattern to implement, and it's been time tested as not exploitable. BYOB, be your own bank. BYOB. Yes. That's the best recurring revenue stream. Why? Because the damn banks did it. And they're worth a fortune. It's a business. Lend money. That's why this DeFi stuff is crazy, is real. It's happening now, and it's exciting. And this is the best opportunity of a lifetime. And it doesn't mean you have to rush into a lending position. It means you have to do your due diligence and understand and never take on too much risk. Clearly, not beer, Noah. BYOB is not beer. It's bank. Be your own damn bank. Clearly take 10%, 5%, 2%. Do a risk assessment of how much shit happens. Is a contract hack, you lose some money. But lend it. Because now you just created a revenue stream of recurring income. And guess what? The only revenue stream the vast majority of people have is employment, getting a paycheck. And that revenue stream sucks because you're trading time for money, and time is the most valuable asset. It is invaluable. And people are trading a precious asset for fiat? Hell no. That's exactly why we're here, to think of the best ways to stop trading something invaluable for something worthless. And we have to go through the complexities of trading the invaluable to the worthless fiat to trade that for something that retains value and hopefully grows value. Just an annoying complexity. Shit. 1233. I've touched on money. I've touched on the future of money. I've touched on DeFi. I've touched on the craziness. Let's talk about the craziness of Ren and the adoption. It's just going to keep going up. Let's talk one more thing about Digibyte. Clearly, there was some crazy history, a lot of emotions flying back and forth with regard to listings and no listings. One quick comment read. Hey, just because we got on the little bus once in a while doesn't mean we won't. My man. All right, so Digibyte. So Binance listing. So Binance is front running Coinbase. All right, I'm trying to talk about a point, but I'm going to read these comments. If play for a second idea, the owners of the money are a step ahead. Yes, well, the owners of the money form the path. They craft the system. They are, it's like building a racetrack. They're actually building the damn racetrack, and everyone else is driving on it. They're literally defining the system for everyone else to operate in. Guess what? They're creating means of control. And that's not a bad thing. And it's like creating the rules of a video game. And if you play the rules right, you're going to win. And that's cool. And that's okay. And that's good for a society to have such an organized structure. And we're all part of a system that's created by the ultra wealthy, is what it is. So the Fed created Bitcoin and will stay in power, and we will be happy that he have our own micro bank. Well, whether whoever created it, I don't think foresaw what's playing out right now. You know, Satoshi's white paper talks about a means of transferring value, peer-to-peer money protocol, and sure as hell did not indicate a store of value comparable to gold and sound money principles. I don't know. I don't know. I'm pretty sure he'd be excited and happy to see what has been created and developed with his baby. Using DGB through RenVM is the future. Well, Digibyte is a UTXO asset that has a capacity to, and frankly, all UTXO assets have a capacity to represent tangible entities, in tokenized form. But what's pertinent and powerful about Digibyte is the protocol, the speed of transactions, and obviously the geographical distribution of nodes, the consensus mechanism, and how it's decentralized. And combine that with the capacity to tokenize real-world assets, ERC20. DigiAsset tokenized representations of real world assets. That's crazy. But bear in mind, there's also value stored in Digibyte. So the whole point of RenVM is cross-chain liquidity at this point, and that's DeFi. It's the ability to access the value stored in UTXO projects for purposes of DeFi activities. We'll get into maybe Syscoin and their bridge. Has more of a capacity to maintain a UTXO tokenized representation in an ERC20 mint. But for the UTXO tokenized representation to have meaning in an ERC20, the ERC20 token needs to retain properties of the UTXO asset. And I'm not sure how that functions currently. If clearly that's not necessarily a thought of the current implementation of systems. It's merely getting a ERC20 tokenized representation of a UTXO asset. Maintaining properties cross that bridge, that's another story. And that's probably a nice to have. I don't think it's a need to have right now, and sure as hell shouldn't be the focus of development. But look, getting Digibyte to have a ERC20 tokenized representation is awesome. But what also has to happen is acceptance as collateral in Aave Compound and Maker. And that's a big reason that RenBTC is absolutely on a skyward trajectory because of WBTC. WBTC front run the entire market. It is accepted on Aave Compound and Maker. And because of a simple liquidity pool, swapping RenBTC for WBTC, RenBTC is accepted as collateral for lending and loan purposes. So what we would need for other UTXO projects to be adopted or be successful or to really make some serious waves, having a RenVM implementation is for likely the liquidity, but then you're out of your DGB position. So the liquidity shouldn't necessarily be like Ren DGB to die, because then you're losing your DGB position, and that's the whole point. When you do a RenBTC mint, you're not losing your Bitcoin position. You still have full access to your Bitcoin. Doing the same thing with Digibyte, you don't want to lose your position in Digibyte. So we need a way to, that's really the necessity for it to be accepted by the lending protocols. But all this is an inevitability in time because there's immense equity to be accessed. And that equity is profitable for the lender, profitable for the borrower and the transactions fees, profitable for the liquidity pools, profitable everywhere as the leverage debt cycle works its magic. And that's exactly what it does. It works its magic. Equity, leverage, debt, more equity, more leverage, more debt, and that's the wealth creation. That is what the world did over the last 50 years, and that is what DeFi is doing the right way. All right, ladies and gentlemen, I thank you very much for joining me for a Monday afternoon talk. It's always appreciated, always a pleasure. Let's keep this fun going. I'm going to post on Twitter. I'm always on Twitter. Twitter's growing, but show me questions. Send me questions. Okay, Igor wants XRP. There's the question. Throw it in Twitter. Let's get some likes. Let's get some comments. Let's get some YouTube subscriptions, and let's keep the fun going, sharing these ideas and making everyone better positioned for financial freedom. Thank you, everyone, for joining me. Peace.